that's got a system that's going to make you rich. The best thing for you to do is to take the benefits of each thing out there, understand it, and combine it into your own strategy. Because there's probably as many trading strategies as there are traders. So I'm not saying don't take advantage of all these things out there. Okay? It's understand their potential, understand what they do, and combine them together to make smart trading decisions. Because when you build and test your own strategy, you're a master. Because I could talk to you for a week straight on just one little trade setup, and you still never master it. Why? Not because you're stupid, you're very smart. Not because I don't want you to learn it. There's no way I can get all the knowledge and information and the insight out of my head and into your head. Because it's years of experience, it's years of feeling it. There's years of understanding. It's just like, I don't know where you all come from all around the world, but I know when I was a kid and got my driver's license, long time ago. Yeah, back when we had the Model T Fords, yes. But when I got my driver's license, first I had to take a written test. And then my father would come out, I had my learner's permit, and my father would come out every night and we'd spend an hour, learning how to do the things in the car, and then go to some parking mall or some school parking lot and practice the things. Then with my learner's permit, maybe late at night when there's no traffic, he might let me drive on the road a little bit. Well, eventually I got my license, not long after that. And then I got my first car. And I had my little bit of experience driving from my house to the mall, from my house to the school, from my house to my friend's house. But still at this point, I'd never been on a highway at rush hour. And even when I was, it was never like when I moved to California and lived in Los Angeles for years, it was never like the famous 405, the busiest highway in the world, trying to drive on, because you get experience. But after living in LA for 35 years and driving that same highway no matter how backed up it was, I was fine because it was experience. But I couldn't teach you all that. Just like my father couldn't teach me to drive on the highway. He could give me the pointers, get me comfortable. But you need to make it your own. And this is the same thing about trading. So I always encourage traders to develop their own trading strategy. Now, tonight, I'm going to share with you some important pieces of information, so to speak. And these are for you to be able to get your mind wrapped around it so that you can start incorporating it and using it in your trading strategy and make it yours. I'm trying to give you those pointers my father gave me the first couple times we went out in the car. So you're not going to master anything tonight, but we'll get your brain thinking in the right way so that you can use support and resistance in decision to possibly come up with your own trading ideas. Now, the first thing is, even when you start to adapt it, is you want to filter your inputs. You want to test and modify. No matter what you think I explained to you tonight, whether you think you got it down pat, don't go trade it. Add it in your trading strategy, test it, see what your results are, modify it and make it your own. But again, you don't have to invent the wheel. You can use all the steps I gave you. Just get them comfortable for you. Because the other thing you have to decide is, what do you want to accomplish? No, not in your life. With your trading strategy. Some trading strategies give you setups. And tonight we're going to be looking at a setup. Some trading signals, some trading set strategies give you setups. Some will give you exact entry points. Okay. There's all types of things that you can get out of a strategy. Now, basically, the support and resistance setup gives you an entry point and a direction in which to trade. So whether you call it support or resistance, demand or supply, peaks and troughs, I don't think anybody really cares. When I started trading, we were very specific about these support and resistance, not the number value, but what we called them, because we were more proper and we had time. They're actually interchangeable. So I don't stop to think of support being when price is moving up, what holds it up, or resistance, what falls it down. I even tell a lot of my students, just call it a price zone or an alert zone or a price resistance zone, because imagine when price is moving up and hits a point where it bounces off of many, many times in the past, and when it gets up to that price, it bounces off of it. What was that? That price is resistance. But if price breaks through that and goes up to the next level, goes up higher and higher, guess what? When it's coming back down, that level will stand as support. So they become interchangeable. They are based on which way the asset is moving at the moment. So in other words, when price was moving up, this was a level of resistance. When price moved above and came up to this level, bounced off it, guess what? This level became support. Then price moved back up and that became resistance. And then price went right through it. Okay. So if we think of these as critical price zones, so we use the word support and resistance, but don't think of them that way. When price is moving up, it's a price that should hold, that the market will react to that price. When price is coming down, that's a price that should hold, that should be interesting in its journey. And its price is going up. So if you're climbing up a ladder, and each one of these were steps on the ladder, when you're climbing back down that ladder, you still have the same steps. But if this was step one, this was step two, this was step three, that's step four. Guess what? This is 1, 2, 3. So think of them as interchangeable titles, or just think of them as price zones or price alert levels. Now, ultimately, support and resistance is critically important no matter what you're trading or how you're trading. I place my support and resistance zones on my chart, and they're always on my charts, and I'm always using them. I don't put them on today because let me pop up a live chart for you guys. Okay. See these green lines, these dashed lines, these solid lines? These are support and resistance levels for the euro US dollar at the moment. They're not your support and resistance levels. There's no mechanical way. There are some technical ways, and there's some things called pivot point calculators. But the best way to get support and resistance is what I call eyeballing. Now, if you don't understand this, we have a whole class on eyeballing support and resistance. But the thing is, support and resistance are the areas in which the journey of price, when it went through these price levels before, got stuck or broke through or went down and bounced off of. In other words, they were the steps on the ladder when price was going up and price was going down. Now, when you haven't used that ladder for 6 months, those steps are still in the same place. And these steps continue, these levels continue going forward once you put them on the charts. So as price moves, the only levels that are important are the levels around that current price. Now, how you put them on your charts, why you put them on your charts is a personal thing. And it's what makes you better than the next particular trader. Now, if you notice on my chart, and I'm not saying I'm better or worse than you or any other trader, I've built my own color code system and key system. And the reason you see greens and purples in this case, and we see solids, big dashes, small dots, they tell me in my own code how important this level was, how long this level's been in existence, and how strategic it is. Now, again, next year, these price levels will still be on my chart. It's just whenever the euro US dollar is trading in this range, these will become important. If it goes up to 110 again, or 120 again, or 130 again, these levels won't be important. What it'll be is the levels when it traded last time at 130 or 120 or 126, whatever it was. Now it happens to be that we're like in whole new territory with the euro US dollar because it's basically in an all-time low. I mean, we're trading now at where is it? 99.7. We're under $1 per euro. Unheard of. So the reason that you see all these green lines is because they're fairly new support and resistance levels, because we had never been at this territory before. But they weren't put on here today. They weren't put on here yesterday. They weren't put on here. They've been on here for several weeks now. Okay, and you can see they're depicted when I started to see when price started to come down to this level. We had to draw new lines because we didn't have any lines on our chart because price had never been at that level. But each time it did, and we found a critical level, a new line was placed on the chart, and these lines have continued forward. And you can see how important. Look, this level right here, and this price level right there. Now, they've been on the charts for at least a week, maybe 2 weeks. Look how important they were in the last few days. Look at all the trading you could have gotten. Buy, sell, buy, sell, buy, sell, buy, sell. That could have been that's a lot of trading. I didn't make this up. You're looking at the live chart. Because assets tend to respond to these levels, because traders respond to these levels. There's no saying you can't break through, and there's no saying this can't happen. But look at this. As price broke through, say here, and price came up to the $1 even with this level, which was a resistance level. As price broke through it, became a support level, and then price finally broke through it, and now it's headed down to this support level, or this price level. Now, there are other ways to put support and resistance on your charts. You can use things like Fibonacci retracement. You can use pivot point calculators. I don't. I use fibs for other things, and Fibonacci's are a great thing, but Fibonacci's really can't be extended into the future, because Fibonacci levels are only about the previous trend and the current trend. So they don't help you next week, next month, next year. But you can see when you put these on your charts and you put them on, and every time price comes back to them, they tend to respect it. And the more times that they respect it, the more valid it is. So when I see this old price level getting respected currently, I'll change it to a thicker color, because it's telling me that this old level that was drawn on my charts is still being respected, and therefore is still a very valid level. Because really, what happened here or here or here is really unimportant. Okay. We know that this was a critical price, but I don't care what happened back here, because I can't trade back there. I can only trade here. So history gives me information, but it doesn't help me trading going forward. Now, but look at this. Look how well respected this price level was. Look at this one. And these have been on the charts for quite some time. So let me, but I'm not a genius. This is nothing new. I'm not creating something that's unheard of that nobody had before. Support and resistance, and support and resistance trading is one of the oldest strategies out there. So it's not that I am a genius. I think, you should be using this in every bit of your decision-making abilities when you're looking at a chart. I don't ever have a chart that I'm using trade that doesn't have support and resistance. And yes, to add them to your charts the first time is time consuming. But again, you only need to draw them on your charts for the current price level. And then when it moves up to another bracket, you draw the new ones on. Eventually, you got your whole chart covered because assets really stay in a relatively small range. And whether you're trading stocks, whether you're trading commodities, all the stuff holds true. And the easiest way to do this is simply get your chart and scroll back historically and look at what prices. Now, there's all kinds of different things out there. There's people who tell you look for swing highs and swing lows. I look for prices that I can visually see the markets reacted to them. Then I will go scroll backwards and forwards to see if there's other reactions. Like here, we're starting to see something important right here. Okay, hold on a second. Okay, that's telling me that this price could be an important level for the euro pound. Now, moving forward, we're not trading in this range. We're trading much lower. But going backwards, we can see how much this has held up in the past. And look at that. Here again, it was an important level. Because I'm not making any trading decisions. I'm putting this on my chart as a potential level of importance. Now, so in my case, I would make them red and I would use a very narrow line and I would use a solid line because that's telling me it's just a slight potential. But the fact is, until the euro pound comes back up into this area, it's really not important to me. I'm only concerned with right now with what's down there. Now, the other thing you've got to learn is not to get hung up on an exact price. Okay. Think of these as price alert zones. Don't get locked in to say the euro pound at 0.86574 is the price. It's not really going to happen. If you talk about a 5-pip range, so maybe you say to yourself when you draw it on your charts, this is the range I'll give it, and this is the support range, because we're looking at the price to come and react at that support or resistance up, or just say to yourself in your own mind that it's not the exact price. If I see it come up and hit that level, go slightly through it, come right below it, because it's a price alert zone. It isn't a finite number. Now, maybe in a slower paced market, and back when you were trading stocks and GE Capital was at $189.45. Well, you might be able to say that maybe $189.65 was an important price because we're talking it's trading in 5-cent gaps or 10-cent gaps per price. But today, when we're looking at saying GE Capital's at 161.08429, that's too small of a zone. So round them out. And figure a way that you can decide whether it's a major zone, a minor zone, an important price zone. You figure it out. And you do this by seeing how critically important they've been in the past. So here we can say this was a major. Okay, we can call this a local or a minor. You can say that short term, we've had a couple responses to it. It's up to you to see what you feel comfortable with. But that's just support and resistance. That's support and resistance trading. That's all that is. Okay. The question is, how do we use this to make trades from? So if we think of when price moves up, if price is moving up and comes to a major level, it's technically, you could call it a sell level. When price comes down and bounces off of something, it becomes a buy level. So as price approaches a sell area, what's going to happen? If something is going to happen at that critical price juncture that we've seen, that price zone, alert zone, we're going to see a change in volume. Okay. And when price is moving up and hits a critical price alert zone and touches it, but doesn't go through it, we should see a decrease in volume, but this becomes your trade setup. Not when price is moving up, it's when it hits a respected resistance or support or price zone alert or whatever you want to call it, a buy sell alert. Now, when this happens, the traders are left with basically two choices: to sell or to buy. But it's now, we're at a price point that's a critical area. So knowing that a particular price is critical gives you a heads up, because good traders don't randomly place entry orders and hope that they get lucky. They place their entry orders at significant price levels. Significant levels come in many forms. So support and resistance is one of these. That's a critical point. Now, why? This happens all the time in every Forex pair, in every financial market. This is how the market works. Buy and sell orders are grouped together in same general area, and when they're hit, we see the impact. You're not going to come up with a price that somebody else doesn't have for a critical price zone. Now, if I had bought the euro at 99.9 and I set up an automatic sell or a target point or a limit point and said if it hits 101.42, I'm going to take my profit and run. Now, if I know, I'm the other trader, but I know 101.42 is a critical price zone, it's going to trigger your sell order. You've made all your profit. You're thrilled to death. You're going home taking the rest of the day off because you made whatever. Okay. I'm sitting there. I know that's a critical zone. I know your sell order is getting activated. That's going to tell me that the price is most likely going to continue to decline, not reverse its trend. We're not saying it's going to go from here to a downtrend. It's not going to flip from an uptrend to a downtrend. Right now, the market's indecision and the price is going to ease down. What you don't care as a trader, whether the price is in an uptrend or a downtrend. You care that right now it's hit this resistance level. The resistance level is holding. So it's most likely going to dip down and go down to the next support level. Okay. It's going to hit that next support level and go back up. So in other words, You climbed up the steps of the ladder. You got up one step too high, and you said, "Oh, you know what? The wind. Let me take a breather." You pulled your bottle of water out of your back pocket. Your left leg went down to the the step lower. You leaned against the ladder. You took a breath. Now, while you're standing there taking your breath, the wife might call you, might turn around, step down another step or two steps to talk while you're talking to her. But eventually you're going to climb to the top of the ladder and finish painting the front of the house. Doesn't make a difference. All I care about is you taking a breath to take a breather. You pulled out your water out of your back pocket. The wife's calling you. So I know I most likely you're going to step down a couple steps. I have an advantage. So if I was sitting there with my buddy and he's saying, he's going to continue going up. And I said, no, he's going to come down a couple steps while he's talking to the wife because it's just natural human tendency. I bet him a buck. Guess what? When the guy stepped down the two more steps, he finished yelling at the wife, yelling down at the wife's answer, and then went up the steps all the way up to the roof to finish painting. It's fine. But I only cared what he was going to do then. So there are a lot of indicators out there that claim to give you great support and resistance levels. I have tried them and I don't find them reliable. Support and resistance placement still needs to be done by a person. These are why support and resistance areas are so important. And you doing the time and putting time in and find them yourself makes you better than the next guy. You understand better where the steps are. You understand, okay, the other day, the most of the times he was using a 6-foot ladder. Today he's using a 9-foot ladder. So what are the steps going to be? Now, candlesticks will help you find these very easily by just looking at the body of the candle. And you can very easily see all the reds and greens on the same price level, or you can see lots of wicks hitting a particular price. But once you have them on there, you've got to be able to make a decision. So when we see price coming down, and we're not talking about a downtrend, we're not talking about an overall market position. We're talking about what's happened in the last 10 minutes, the last 30 minutes, the last hour. Price has been easing down. At some point, it's going to get hit indecision, and that indecision is going to be formed. Okay, indecision happens all the time. Price coming down a little bit happens all the time. But when it establishes itself directly on your price zone, okay, you have an important story to tell because that price zone is working. And what you have is bam, the market's hitting you in the head saying, look, price just eased down, but it got down here and then bounced and it didn't continue going through. Not saying it's not going to go through. Like I said, it's not telling it's going to reverse the trend. But now you have a critical juncture. And when you're at that critical juncture, you can make important decisions because you can get a high probability trade with a lower risk factor. Now, because you can't predict the markets, I can't predict the markets, we have to be able to make a decision. And this is where we want to move the odds in our favor. Because price action allows you to take many different types of trades: reversals, continuations, range, swing, breakouts, and scalps. So there can be a guy looking at basically the same set of rules we're talking about right now, and he could be taking a continuation trade. We're looking at a reversal trade setup. So price has eased down, it's hit that price zone, or the reverse has eased up and hit the critical price zone. At that zone, it can only do basically three things. It can bounce off and continue easing down to the next level. It can break through and go up, or it can stay on that level for a while. So if you were to set up a sell order when price hit that resistance level and bounce down below it, And you can't do this 3 candles, 5 candles, or 7 candles, because this only holds for now. When price hits that resistance zone and bounces slightly off of it and doesn't go through it, you can sell. Okay? You can take your stop loss slightly above that resistance zone, and you put your order entry slightly below the candle, the close of the candle when it fell below. So what happens if price reverses, starts to go up, your trade never gets executed. So you never had a trade, so it didn't matter. If price bounces off and continues down, you made money. If price dips down, execute your trade, and then turns around right and reverses up, if you set your stop loss just a pip or two above the, remember I told you you have that zone, you got to give it a little few pips, set your stop loss just slightly above that. Yeah, you had a loss, but you had a very small loss. So reversals occur quite often, but if you do not know what to look for, you cannot trade them. It is critical that they set up and the reaction is directly on one of those price alert zones, the support and resistance, not getting close to it, not below it, not happening in between. You need price moving in a specific direction for a short period of time. And then when it hits that support or resistance zone, it dead stops. Now, instead of normally having 2 choices for a trade, you have 3. One, like I said, the trade never gets executed, so you have no loss. 1, the trade gets executed and you get out of it with a small loss. 3, it gets executed and you make good money. You've minimized the potential, you've increased your profitability, you've minimized your risk, and if you could do this over and over, you'd be doing well. So reversal is one of the strongest price action setups, and one that's the easiest to trade. And because they occur so often, you can trade this setup exclusively and be a skillful trader. Now, last time I taught this class, I actually got what I thought was a very nasty email from somebody. Okay, but I'm going to respond to it, and I've been responding to it every time I teach. Somebody said to me, well, if this was so damn good, why didn't, and like I said, the email wasn't, why don't you just do it on live charts and show it to us in class? Well, the fact is, I never know what asset's going to be doing this, and I never know how the markets are going to react at the moment. I wrote him back, said, if you want to spend 12 hours looking at a chart and wait for this to set up, or go find all the charts where you have this trend and you have the reversal off the, okay, we can sit there and watch it together. But I can't predict what assets can do what at what time. I just know what I'm looking for when I see it happening on one of the few assets that I trade. Because one of the reasons you don't want to trade 30 and 40 assets is you don't see these things coming. But because I can't see a preceding trend and then a reaction directly at support and resistance unless I'm watching. It's not, I can't set it up and hope it happens. You know, I've watched people in their live trading class, watching when they trade the monthly the jobs report. They used to suck everybody into trading because we know exactly when they release the job numbers, the market's going to do this or the market's going to do that. It's about watching for these things to happen on the assets that you trade and having all of your information. So when you see the right setup coming together on your screen in front of you, you know what to do. So you want to look at the preceding price trend, not the overall market trend, the preceding 3, 4, 5, 7 candles. So if the preceding trend is a strong move and is headed to either support or resistance, and then we get the indecision candle directly on the support or resistance zone, we know what to trade, because an indecision candle happens all the time. All of these things happen. Markets have indecision. It's only when you have a specific market direction, you have a specific support and resistance price action, price zone, and you get price getting stuck at that specific zone. What was the other thing I told you about? Volume is your final confirmation. Volume should decrease as it hits that level and then increase when it reacts. Now, the thing is, you can't wait for 2 or 3 or 4 candles because the whole move is over by that point, or your profit potential is gone because the biggest move is going to be the next few candles. So it's just important. So after a preceding trend stalls a support or an indecision call, you have a reversal trend. So where do you enter the trade? You know what it looks like. You know that you need to enter after indecision and before the reversal trend. So getting in at the right time is very important. Preceding trend, the indecision candle, the reversal trend. But remember, failed trades happen. There's nothing you can do about them. But by getting in at the right time lowers the percentage of failed trades. Many people wait for the close of a candle to get in. But I have tested this early, and waiting for the close gets you in too late. So as price moves up to that support and resistance area, and you get this indecision candle that bounces off the area, you would put your stop loss slightly above, your entry point slightly below. And like I said, if the price continued back on its movement upward, your trade never got executed. Okay. If price continued down, your trade is executed, but reversed on you. I'm sorry. But then reversed on you, you would get out here where your stop loss is. Or price would dip down and your trade would get executed and you would get most likely the profit of the move all the way down to here. So it is the reaction of the price at that support zone, not close to it, not below it, not getting as we're going to. It is on that price zone that you have already pre-marked on your charts that it is the important level. So I always start looking at my trend. Then I look at my support for every day for whatever I'm trading. But then I look at price action. And finally, I look at volume to confirm. This can be your entire trading strategy. But remember, in trading, a lot of people tend to overcomplicate simple concepts. Sure, some of the concepts in trading are not the sort of thing that you would intuitively know, but many things are easy. You just must know what to look for. And what are you really looking for? Is a price in which to enter the market and which direction to enter it, and a price to get out. You can overcomplicate it with tons of technical tools and all of these things on your charts, or you can make it simple because the actual decision is pretty simple. The hard work is actually getting the support and resistance zones on your charts. And eventually, when you're trading just a handful of assets and time has passed, like I said, I never had support and resistance zones at the level the euro is trading against a lot of assets today because it's never been at that level. So these are all relatively new, but you know what? It's been at that level for the last few weeks. And so we have enough time to validate it. So I hope you learned something tonight. Thank you very much for joining us and have a great trading week. Bye now.